Welcome to SOHO China's 2013 annual results. I'm delighted to report to you our strong financial results, leasing progress, and current thinking in this very challenging market. In 2013, our core earnings reached a record high of 4.4 billion RMB, up 33%, and our core net margin also rose to a historical high of 30%. The company continues to remain in a strong cash position. We're currently holding 10.6 billion RMB in cash, with the net gearing still very low at only 17%. The recent sale of 2 Shanghai projects will raise our cash position by 5.2 billion RMB. And on top of this, we can draw down 6.5 billion RMB from signed construction and operation loan agreements, bringing our total liquidity to 22 billion RMB. We have consistently paid a high and stable dividend, with an average dividend yield of 5.5% over the last 3 years. Today, the board has approved a final dividend of 13 cents RMB per share, bringing the annual dividend to 25 cents RMB per share for the full year. This past year, we made major progress in leasing, exceeding our own expectations. For Wangjing SOHO, Beijing's newest landmark, we pre-sold towers 1 and 2. We have just turnkeyed and are now leasing the 2 towers. In less than 2 months, we have already leased 29,000 square meters and achieved a rent as high as 7.5 RMB per day, which is remarkably strong for this new location. We're seeing a lot of internet companies as the first tenants to move into this iconic building. Tower 3 of this project, which we are keeping as an investment property, will be finished in the second half of this year. You probably remember last year we turnkeyed on another major development, Galaxy SOHO. Within a year, we managed to lease over 124,000 square meters of this gigantic project, and the average rent increased 27% to 9.5 RMB per day. To date, 77% of the total office space has been occupied, and guess what? Over 70% of the tenants are financial companies. Qianmen, our only pure retail development, has been rebranded as a tourist destination with an upgraded tenant base. We now have occupancy at 73%. This is Beijing's most prime tourist attraction. Whenever tourists come to Qianmen, it is the only retail destination, and it has over 30 million visitors annually. We have many experienced stores open at Qianmen with brands like Samsung, Lenovo, and Madame Tussauds Wax Museum will open here in the spring with many characters you will surely recognize. Now moving on to Shanghai. I'm pleased to tell you that SOHO Fuxing Plaza, which is still under construction and scheduled to complete in the middle of this year, has already had 41% of its retail space pre-leased. The highest rent at Fuxing so far is 16 RMB per day. We still believe that rent has tremendous room to grow, as these are still the early days for this project. Again, SOHO Century Plaza was 100% leased in only 9 months, and the highest rent achieved is 9 RMB a day. Many people ask, why does SOHO lease so well? The answer is in the 2 distinct features of our product: amazing architecture and clean air. We have always worked with the world's best architects, and their creative designs are what turn our buildings into iconic landmarks, making marketing very easy. Tenants associate SOHO buildings with innovation, creativity, and beauty. And now, a new feature has set us apart: purified air. Pollution has become a leading concern for residents in Beijing and in Shanghai. The opportunity to move into SOHO office buildings with purified PM 2.5 free air is a major attraction to our tenants. Now let's talk about the market. Last June, when we saw the first wave of China's credit crunch, we knew that liquidity would become a major issue. So we quickly adjusted our strategy for the second half and cut back on acquisitions. By now, it's become apparent how bad the credit crunch is. Liquidity is very tight, banks are very focused on controlling lending, Under such circumstances, the only thing that matters is to hold plenty of cash. That's why we decided to sell SOHO Hailun Plaza and SOHO Qianmen Plaza. That doesn't mean that we're not committed to the strategy of build and hold. The sale raises our cash position and boosts our total liquidity to 22 billion RMB. We're holding more cash in order to capture better, even more prime assets. The market will surely correct itself, and when it does, we want to be able to make quick and significant acquisitions. Our targets are still Beijing and Shanghai's most prime assets. For those of you who remember back in 2009, the financial crisis opened up a short 6-month window to acquire prime assets at distressed prices. We were quick to act, precisely because we held plenty of cash. This is how we entered the Shanghai market, and it is with the same spirit and the same belief that we're using the same strategy now. So here's how I would sum up SOHO China's position in today's market. We are the largest prime office developer focused only in Beijing and Shanghai. Our cash-rich, high-dividend financial policy makes us the most defensive stock in a tough market. This September, we will inaugurate 2 of our major landmarks, Wangjing SOHO in Beijing and Sky SOHO in Shanghai. I invite you all to join our celebration.